Hey, what's going on YouTube? This is Tom here with another episode of Market Cap Investing. We're week 3 in our journey with our purpose to show the power of long-term compounding growth with fractional share investing of just $5 per week. I want to quickly remind you that I'm not an investment professional and this is for entertainment purposes only. I also want to remind you of a couple rules we're following. So rule number 1 that we're following is that slow and steady wins the race, which means we're not trying to time the market, that we're buying companies we know and we're buying companies that we want to own for 10 years or longer. And our second rule is that we're not worried about the share price, we're worried on the market cap. Share price doesn't indicate the company's value, market cap indicates the company's value and its potential growth. And a real quick reminder on what market cap is. The market cap is how much it would cost you if you wanted to buy all the shares of the whole company. And so, for example, even though Walmart's $151 per share and Apple's $116 per share, that does not mean that Walmart is worth more than Apple. Because Walmart has less total shares than Apple, significantly less. And so if you were to pay $151 per share times all the shares that Walmart exists, it would only cost you $430 billion only to own all the shares of Walmart. Whereas if you wanted to try and buy all of the 17.1 billion shares of Apple at $116 a share, it would cost you almost $2 trillion. So we're looking at this middle column to understand the relative size of a company and give some indication of can that company grow to be bigger and bigger over time. With that, let's get into this week, week 3. We're going to start out with our analysis of Starbucks. So really quick, looking at Starbucks, this was a suggestion from one of my watchers, so thank you for that suggestion, Olive. Looking at Starbucks, it's currently $97.50 a share. It does $23 billion in revenue, which means how much coffee it sells and other products it sells. It adds up to almost $24 billion. And it makes $3.5 billion per year, which means that all the profit it makes from all the coffee adds up to $3.5 billion. Now that used to be almost $6 billion, but as you can see, 2020 has been a really tough year. If you look over here, 2020 has been a tough year because of COVID, not as many people going out and buying coffee. However, this last quarter, which is the last 3 months, it's gotten significantly better. You can see that sales are up, that's the green bar, and revenue, or earnings, which is profit, is up. And so it has already turned a corner and it's ready to start making money again off of COVID, so we're ready to buy some. So with that, let's go to our Fidelity account, which we started again with $40, and we're doing $5 per week. And I've set up Starbucks to buy at $5. I'm going to preview that order and check out the details here and place the order, and then we'll go back and look at where we're at as a total. So order received. These tend to happen very quickly, and so you can see in positions immediately we already have Starbucks. So far we have lost a little bit of money in our overall Starbucks 3 cents loss. We've gained money on Apple today. We've lost a little money on Walmart. So you can see how these change very little over time. So these are the 3 stocks we've purchased so far, and this is where our portfolio sits after just 3 weeks. And then I'll be doing an update